Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Stock Market Recap, January 31st. Yes, January is over, 2026. And remember, folks, if you want to walk on this beach in the morning like Jimmy Buffett used to do, you've got to learn how to invest even better than Warren Buffett does now. And, well, this week the market closed the month on a sour note because it wasn't a fun day, either Thursday or Friday, but it did manage a 1.4% gain for January. You multiply that out by 12, and you've got a better than normal, or I should say better than average, market return. So we'll see what happens. But some inflation numbers just came out, which is not helping the dovish case for interest rates. And yes, we have a new Fed chair appointee who should please everyone because he was hawkish at one time, or known as being hawkish, and now he's turned a little bit more dovish. And so I think this appointee would please everyone, both the doves and the hawks. And our weekly stock analysis video, well, Arista Networks in the telecom equipment business is up over 660% in the past 5 years and up almost 12% this month. And don't forget, the market is barely eking out a gain for the month. And yeah, this stock is doing very, very nicely. And it is a nice addition to our growth portfolio. And our ETF video, we go to our computer program to discuss the oil and gas ETF as well as the energy ETF, because some of you have asked me what stocks should be in those, or the top stocks in those ETFs. And folks, the stocks in each sector are subject to many, many variables that are uncontrollable, such as oil output by, say, the OPEC nations. How about price controls? How about the cost? If the cost goes up a little bit, some of the well drillers in this country can't drill and make money if oil is below $60 a barrel. So there's so many things that are involved in all of this. And where are the refineries? And when you drill for oil, what kind of oil is going to come up? Very thick black crude, or nice oil like was discovered in Pennsylvania 100 and some years ago. So yeah, there's so many variables, and it's very, very hard to pick stocks in these ETFs. And maybe we show a case for just buy the ETF rather than looking at the top stocks, because there aren't many top stocks, and you never know which of those what we consider a top stock may do over the years, and we show several examples in that. This is a good video, by the way. And we go to our computer program and show you how to work that relative to getting the specific stocks in a particular ETF. Now, this past 3 months that we have here, this is the S&P 500, and this blue line and the top blue line are volatility bands, and you can see we went up almost to the top right in here and turned right around, and this is the 20-day moving average in here. And so we see the S&P sitting, closing just on top of that 20-day moving average. The only problem is down here is that volume has increased to the downside, which we don't like to see. This indicator down here is about as flat as you can get, so it's giving us no help at all, which means Tuesday or Monday will be a fun day in the market this coming week. Yeah, here we go into February. And this is the S&P 500 again. 20-day moving average is this green line in here, and you can see where it closed above it. But this indicator up here turned down. However, not to fret so much on this indicator, because when it turned down before, we just had a couple of quick days of downside movement, and this was pretty scary in here. And then all of a sudden we had a nice 6-day rally. So does this decline mean anything? Well, it sure looks like we may have a little bit more of this to go before it flattens out or turns around. And then down here again, the volume has been increasing as the market has been drifting down, closing above that 20-day moving average. In other words, falling below it. This vertical line is the travel for the market during the day. This left little blurb here is the open, and this little horizontal line on the right over here is the market close. So that's how you look at these vertical lines with an open and a close for the day. Now let's go to the QQQs, and we see the same type of thing, except this QQQ turned down and closed below the 20-day moving average. Not such a big deal. We do have this indicator up here turning down, and Friday the volume was lighter than it was on Thursday. So, and you can see the travel during the day on Thursday was quite large, and it was smaller on Friday, and some analysts call this an inside day, so which is not a bad sign in here. And the lighter volume helps a little bit for our thinking going into the following week. So one index, the S&P, is telling us one thing, the QQQs are telling us another, but we have to look hard to see the difference, which means maybe we're looking too hard and we just see what next week brings us. Because don't forget, the economy is getting better. There's a lot of building going on up there. There's a lot of investment going on in this country. So we just see things over the long. If we look over the valley here, we see a bright, sunny hillside on the other side of this valley. And this might not be a very big valley at all, but we'll see. You can never tell what's going to come out of the politicians. We're going into a midterm election come later this year, around November or so. And so there'll be a lot of spending by the government and a lot of positive rhetoric by the administration which is in power, and we'll just have to wait and see what happens. But overall, the companies are making money. Even though a lot of stocks went down over the past couple of weeks, they are making more money than expected. And the last number I saw was 76% of the stocks have beaten their estimates for earnings and revenue growth. So that's a good sign. And yeah, for those of you who want protection, right now the SPY is 691. Guess where it was last week? 691. So nothing moved this week. It went up, it went down, and it didn't move. And we do have a February, a March, and an April SPY put. And remember, SPY is 1/10 that of the S&P 500. And this is about a $200,000 portfolio. And I know most of you don't use the puts at all, and some of you trade them, but we just put them out here. This is for protection if the market should drop more than 12 to 15% or 20% as it does every 5 or 6 years. So that's why most of you don't have them. You just let it ride with the market. Just because the market falls 20% doesn't mean stocks are not making money or companies are not making money. They are making money. Buffett likes to bring out the period of 1973, 1972, when the market was just falling, and yet all the companies were making money, and he just put so much money to work during that period when, boy, everything was in dire straits. The cost of oil, fuel oil, heating oil, gasoline was going up, and you couldn't find one bit of brightness at all, no matter where you looked. And yet the companies were making money, and the market was reacting the wrong way, of course, and the market overreacts one way or the other. But he saw that companies were making money, and right now companies are making money. So that's how he looks at some of these corrections. Are the companies making money, or are they not? And if they are, and it's a good company, that's when he puts money to work. And the QQQs, 621, that's right where they were last week, folks. And we have the same things, but the QQQ puts, which are a little bit more expensive than the S&P or the SPY puts, because the QQQs, the NASDAQ 100, is more volatile than the S&P 500, and that's why you pay a little bit more for it. But as I said, most of you don't use these puts, but here they are, just in case you want that downside protection from any kind of craziness that happens out there. So, folks, we had a do-nothing week. We should have stayed in bed, or should have gone to the beach and not worried about it. And for you folks up there, stay by the fireplace. Believe me, it's been a tough winter already. And we actually expect down here in Florida, right on this beach here, we expect a temperature of 31 degrees on Sunday night. And the people down here are just not used to it. Even the people from New York that have summer or winter homes down here, you're not ready for that 31 degrees because that's what you left. Anyway, and then it warms up after that. But remember, if you want to walk on this beach like Jimmy Buffett did some time ago, then you've got to learn how to invest even better than Warren Buffett. So, folks, go out, stay safe. We'll see you back here in a couple of days.